There are losing trades that even when I look back on them years later, I still can't clearly point out where I went wrong. At the time, everything looked fine. Clean price zones, valid signals, supportive news, yet the market still reversed, coldly, as if it had never cared about any of the things I believed were right. I went through that feeling so many times that I eventually stopped getting angry. I would just sit there, staring at the screen for a long while and slowly begin to realize something. Maybe the problem wasn't the trade itself, but the way I was looking at the market. I spent years studying technical analysis. Not casually, this wasn't a hobby. I studied like someone clinging to the last thing they could trust. Candlestick patterns, indicators, market structure, everything had its place in my mind. I believed that if I were disciplined enough, worked hard enough, the market would eventually be fair. But the market isn't fair, and it doesn't need to be. For a long time, I thought I was analyzing. Only later did I realize I was merely reading what had already been prepared for me to see. I entered trades at the same time as the crowd. I believed in good news precisely when others needed buyers, and I paid for it with real money, with time, and with my own arrogance. I met my mentor when my account was already thin, and so was my confidence. He didn't teach me any new indicators. He didn't change my entry strategy. He said just one short sentence: "The market is not on the chart. The chart is merely a curtain people put up to hide what is really happening." At the time, I didn't understand it. It took a long while, after many more losses, for that sentence to begin making sense. The chart is only the surface. It comes after decisions, after capital flows, after power has already moved. By the time you see a signal, someone else has already acted long before you ever noticed it. I still remember that USD JPY trade. Good news, favorable analysis, everything was right. I entered the trade and the market moved completely against me. A few hours later, nearly half of my account was gone. There was no dramatic shock, just a long, heavy silence. I took that story to my mentor with a very simple thought. Surely I must have made a mistake somewhere in my technical analysis. Maybe the pattern wasn't clean enough, the indicators weren't fully aligned, or I entered the trade one step too early. But he didn't ask me about the chart. He didn't care which indicators I was using. He didn't look at waves. He didn't try to identify any patterns. He quietly poured tea. His eyes were calm, as if the story I had just told him was nothing unfamiliar. Then he asked me a question, very gently. "Do you really think the market moves because of the news?" I nodded immediately. I answered exactly the way I had been taught, to follow data, expectations, and published information. He smiled. Only much later did I understand that it wasn't a mocking smile, but a kind of compassion for someone standing where he himself had once stood a long time ago. "You are looking at what they allow you to see," he said. "What truly drives the market isn't on the chart, it's backstage." I froze. Then he added another sentence slowly, and for me, it was the first real wake-up call of my trading life. Charts only reflect the emotions of people who don't have information. From that moment on, I knew I had to relearn everything. Not how to trade, but how to look at the market through the eyes of those who truly operate it. I stopped trying to become a better trader. I began to learn to observe like someone who can read the flow of power and money. The people who quietly survive in the market never talk about RSI, engulfing candles, or price patterns. They focus on one thing only: the market's real reaction to capital flows. After spending some time learning to see the market through capital movement and policy reactions, I felt as if I had woken up from a very long sleep. I traded less than before, but with every trade, I knew exactly why I was entering. I was no longer afraid of news, no longer clinging to signals. I simply observed and waited for reactions. It was during that period that I wanted to help a close brother of mine, someone who used to stay up late trading with me, who had blown accounts, who had held losing positions and repeated the same mistakes I had once made. I told him everything, every macro perspective, every lesson my mentor had passed down to me. I spoke sincerely, no competition, no preaching, but he didn't listen. He snapped back immediately, his voice sharp. "You think you understand more than I do?" I just said, "I don't want you to go through the same cycle again." He clenched his voice. "I don't need you to teach me. I trade my own way. How much have you even made to act like a teacher to others?" That sentence didn't hurt my ego. It made me silent. Because for the first time, I understood something very real. When someone isn't ready to look at themselves, every attempt to help feels like an insult. I told that story to my mentor. He sat quietly, no reaction, no words of comfort. After a moment, he said just one sentence: "Don't interfere with another person's cause and effect." I fell silent. Then he looked at me and added slowly, "If you want to help someone, say what you believe is right. Whether they listen or not, that is their choice." He poured more tea, his voice calm and even. A tree only begins to sprout after the seed has rotted long enough in the soil. At that moment, I understood something that was very hard to accept. Not everyone is ready to understand. Not everyone wants to wake up. And not everyone is allowed to wake up at this time. Some people need to burn one more time. Some people need to pay a higher price, and that is not my responsibility. That is why I created this channel. Not to teach you how to enter trades, not to prove that I am better than anyone else. I only want to speak the things that, if someone is truly ready, they will hear on their own. If out of thousands of viewers, just one person stops at the right moment, steps away from a dangerous trade, or looks back at themselves before adding money one more time, for me, that is enough. Because the market is not short of people who are technically skilled. What it lacks are people who understand themselves before trying to understand price movement. And if I can pass on even a very small part of what my mentor taught me, if just one person truly hears it, then continuing to tell this story is already worth it. Next, I will share how my mentor looks at the market without looking at charts, and why those who quietly survive through many cycles do not talk about technical analysis, but only about the reaction of capital flows. After my first meeting with him, I followed my mentor like a shadow. I once thought he would teach me a special pattern, a never-lose system. But no, he never began with the chart, and he never rejected technical analysis either. It was simply that he never stepped into a chart before fully understanding the macro environment operating behind it. My mentor has a complete system, a way of seeing the market that allowed him to survive multiple crises that most traders never come back from. And in that system, the very first step is always macro analysis. Because my mentor believed in one very simple thing. If you don't know where the big money is flowing, then no matter how accurate your technical analysis is, you are still standing on the opposite side of those who hold real power. One day, he placed 3 short lines in front of me, written very simply. First, monetary policy. Second, the market's reaction behavior. Third, global capital flows. He underlined the second line and said, "This is where most traders fail, because they don't analyze reactions, they analyze expectations. And expectations are usually prepared in advance by the media, poured neatly into the ears of the crowd. Real reactions, true reactions, only appear after the people with money have already finished acting." My mentor gave very simple examples. Sometimes gold falls even when the news is good. Sometimes the US dollar rises even when CPI comes in low. The crowd gets confused, desperately trying to find reasons. The people with money don't. They had already positioned themselves long before the news was released. I asked him, "How can you know that?"
He answered very briefly, "You don't need to know the details. Just look at who has the ability to create a reaction that goes against logic and who those people are." That was the first time I truly understood something. Macro analysis is not about predicting where price will go. It is about understanding who is holding the flag and who is leading the game. My mentor was not against charts, but he taught me this: if the chart is a map, then the macro is the wind direction. Don't raise your sails when the wind is against you. From that day on, before opening a chart, I always look at interest rates. I follow policy meetings. I read between the lines of what seem like meaningless words in central bank speeches. And little by little, charts stopped feeling mysterious. They became just the visible surface of a picture whose hidden depth I had begun to understand. Next, I will share with you the 3 core principles my mentor always uses in this macro analysis step. If you have ever lost because news moved against expectations, if you have ever wondered why the market reacted in a way that felt illogical, then this may very well be the point where you need to start over. After many months of simply observing my mentor, following every interest rate meeting, every moment he remained silent while the crowd grew loud, I came to understand one thing. The market is not chaotic. It simply doesn't operate the way most traders believe it does.
Gradually, I came to realize something. My mentor never looked at the market as a technical problem. Every time I asked him, "Do you think the US dollar will go up or down next?" he always gave the same answer: "You're asking the wrong question." Then he would continue, "The right question is not whether the USD will rise or fall. The right question is, who has a reason to make the USD rise?" From that moment on, I learned the first principle. Principle number 1, analyze reactions, not events. My mentor never cared about how the market should react. He only cared about how the market actually reacted. He once said, "News doesn't matter. What matters is who acts first and who panics later." There was one time when US CPI came out better than expected. As soon as the news was released, the crowd erupted, saying the USD was about to surge. At that exact moment, my mentor sold. I asked him, "Why the opposite? It's good news." He replied briefly, "The crowd is jumping in last." When everyone knows the news is good, the ones with real positions start to distribute. That trade made him a significant profit, not because he predicted the news correctly, but because he understood the law of reactions. After that, my mentor taught me the second principle. Principle number 2, observe capital flows, not charts. My mentor taught me to track things that don't appear on the chart. What are ETF funds buying? Are countries increasing or reducing their foreign reserve holdings? Where is capital flowing out of government bonds? He said, "Money never lies. It just doesn't speak in words. But if you know how to listen, it speaks more clearly than any news headline." And he was right. Since I started watching capital flows instead of staring only at charts, I no longer get pulled into false breakouts. I no longer enter trades just because the price looks good. I began to understand this. Charts show the outcome. Capital flow is the cause. From that point on, I stopped getting pulled in by headlines like strong growth, breakout, or trend confirmed. My mentor then taught me the third principle, and also the hardest one. Principle number 3, think in reverse. Always think against the crowd. This principle hurts because it forces you to question the very things you believe are right. When the market rallies aggressively, I no longer ask whether I should buy. I ask who is about to exit. When the market sells off hard, I don't rush into fear. I ask myself who is quietly accumulating. My mentor once said something I still remember clearly. If you react together with the crowd, it means you're already late. And if entering a trade feels uncomfortable because you're afraid, chances are you're standing on the right side.
There was one time when the entire trading community was convinced that AUD/USD would surge because of central bank easing. The news was everywhere. Analyses were flooding in. Everyone said it's obviously going up. My mentor didn't. He sold. And he said, this is the cleanest trap of the year. A few days later, AUD/USD collapsed straight down. At that moment, I looked at him and I had no more questions. Those three principles sound simple, but if you apply them long enough, you will understand one thing. They don't teach you how to win fast, they teach you how to survive. And in trading, surviving long enough is the greatest victory of all. Next, I'm going to tell you about a trade I took using all three of these principles. Not because of the profit, but because it was the first time I didn't panic when price moved against me. I still remember that day very clearly. The US had just released an exceptionally strong CPI report. The entire community was excited. Forums were heating up by the minute. News sites kept predicting that the USD would continue to rise. On the chart, USD/JPY had just broken its previous high. The setup was clean. The news was good. Market sentiment was extremely bullish. Everyone was buying. I was selling, right at the very top. Not because I was brilliant, not because I had superior technical skills, but because I noticed something very strange. Price was moving, but capital flow wasn't following. There was no real buying pressure, only small pushes upward. It felt like someone was creating artificial waves, pulling in the last buyers, and once enough people were in, the market began to change direction. At that moment, I suddenly remembered my mentor's words. When price moves aggressively, but capital flow doesn't follow, someone is pushing the boat in order to exit, not to add more. I entered a sell position. My stop loss was placed very tight. I didn't expect much. I wasn't trying to predict how far the market would go. I acted simply because every sign suggested something didn't align. About 30 minutes later, USD/JPY began to slow down. Then it reversed, and it fell straight down without hesitation. No bad news appeared. No abnormal announcement was released. No one could explain why. I didn't catch the entire move. That trade didn't make much money, but it gave me something that hundreds of trades before it never had: a deeper understanding of the market's true nature. For the first time, I didn't enter a trade because of a signal. I entered because of an anomaly. I didn't care how many pips price would move. I only knew one thing. This was a moment when the market was lying, and I acted on the silence of capital flow. From that trade onward, I was no longer a trader who clung only to charts. I began to see the market as a living organism. It knows how to seduce, it knows how to conceal, and it knows how to mislead. Before closing this first part, there's just one thing I want to say. Don't go searching for a mythical trading system. Look for an understanding of who holds the power that drives the game. I know, you may be waiting for a formula, an indicator, a guaranteed pattern, but no, what you've just heard is only the beginning of what my mentor passed down to me. Macro analysis is not the destination, it is only the first door, one that helps you step away from blind dependence on charts. Once you walk through that door, you begin to see things most traders never see. Abnormal reactions to news that seems perfectly clear, the silence of big money before every major reversal, and invisible hands pushing price in the wrong direction to lure people into traps. That is exactly what part 2 will be about, where I will tell you how my mentor detects market manipulation without volume, without footprint charts, simply by listening to price lying in silence. You don't need to be better than others, you only need to see earlier than they do. And to see early, you must stand in the right perspective. I didn't create this channel to teach trading. I created it to say the things that, if left unsaid, would cause many others to repeat the same path I once walked. Someone once asked me, after trading so long, does anyone really understand what you're talking about? I just smiled, because for me, one person understanding is enough. If you've listened this far and something quietly resonated inside you, maybe you are that person. If you're ready to look at everything again from the beginning, leave a comment, "I am ready." That's not a commitment to me, it's a commitment to yourself. And if you find this video valuable, share it. Somewhere out there, there may be someone feeling as lost as you once did, and one sentence from this video might save them from one more bad trade. I used to trade like a gambler. I still trade today, but now with the mindset of a survivor. I'll see you in part 2.